Nervousness about the impact of the coronavirus outbreak on Monday saw the Dow wipe out year-to-date gains, yet Bitcoin is up around 30% so far this year, far more over the last 12 months. So is it a safe haven in stormy markets or something else entirely? Morgan Creek Digital Assets co-founder and partner Anthony Pompliano joins us now. Great to have you with us.
Absolutely. Thanks so much for having me.
You made two observations about the coronavirus outbreak, not that we want to take away from the tragedy that it represents, but the first thing was mining, because a lot of that happens in China.
Yep.
Thoughts there?
Big thing is a lot of manufacturing plants are being shut down, and so those companies are losing revenue. But when it comes to mining, computers are doing most of the work. It takes very few humans, so mining's not impacted. And it's also very decentralized across the globe. And so if you get kind of a virus outbreak in one geographic area, it doesn't necessarily affect the mining hash rate nearly as much. And so I don't think that mining is really susceptible to the same things that like a traditional manufacturing company is.
Okay, we're going to come back to that, I promise you. But we'll move on to the point that I was just making there. And I think the perhaps lack of understanding about how you view crypto, specifically Bitcoin, relative to markets. A safe haven or a hedge doesn't necessarily have to be rising when markets go down.
Yeah, I think a lot of people confuse safe haven and non-correlation, right? And so a non-correlated asset just means that the value drivers are different, right? You see stocks or other assets in the traditional markets are driven by GDP, interest rates, et cetera. Bitcoin's not driven by that. Bitcoin is a artificially capped supply asset that's driven by demand, and demand continues to increase, and so over time you expect supply and demand economics to play out.
So sometimes you could have Bitcoin rising when markets rise. Sometimes it could go down. That's positive correlation. It can also be negative, but what you're saying is remember what the drivers are here, and they're different things.
Absolutely. Bitcoin over a long period of time has been a non-correlated asset. And what I think is exciting about that is when we see times of global instability, geopolitical uncertainty, things like coronavirus, et cetera, stocks, bonds, gold, et cetera, kind of do what you expect them to do. Bitcoin doesn't do that. And so the fact that it doesn't go up is not bad. It's a non-correlated asset. So it's doing exactly what it's supposed to do for your portfolio, which is exactly why we think investors should have it in their portfolio.
Critics would say, though, that, hang on a second, you're telling me to add it to my portfolio. Surely I want it to be doing sort of the opposite thing when markets are going down.
Yep. Again, as long as it is preserving your wealth or increasing it, that non-correlation makes it a safe haven asset, right? You don't want to have everything in your portfolio have the same value drivers. That non-correlation actually reduces the overall risk of the portfolio. Bitcoin has served that purpose for many, many years now. We think that it will continue to do that into the future.
So Brad Garlinghouse, the CEO of Ripple, was recently on, and he said what's going to define crypto assets in 2020 is the utility value. Where on that curve between a store of wealth, something that you just hold and the price goes up, versus actually something that you can use is Bitcoin? Because a lot of the criticisms that I read, one, it's energy intensive, it uses a lot of energy, and two, in terms of transaction speeds, it's really slow.
Yeah, so first, when it comes to the energy consumption, Bitcoin is using majority renewable energy, right? People have an input into that business, a cost that is the energy cost. And so what they're actually doing is they're going to find the lowest cost energy, which happens to be renewable. So we see things like gas flaring, waste to energy, geothermal, hydroelectric, et cetera. So I think that's actually driving a lot of innovation.
True. I see a lot of criticism of that fact. And if you go to China, I mean, that's coal-fueled. They are fossil fueled energy.
Yeah, so there's definitely some not renewable energy, but there's many studies that have now come public where 60, 70, 80% of the energy consumption is actually renewable energy.
In total?
In total, yeah.
Wow.
Absolutely. And then when it comes to utility on the transaction side, last year, the adjusted transaction volume on chain, so this is not exchange traded volume or anything like that, actually people sending it for one purpose or another, was over $500 billion. And so what that means is it's bigger than Venmo, Apple Pay, PayPal, et cetera, in terms of transaction volumes. And so people
as long as you're not doing it too often, I guess the point.
Well, so again, people can complain about transaction speeds, cost, et cetera, but at the end of the day, people are using this more than they're using Venmo, Apple Pay, and PayPal.
As a store of wealth, though, is the biggest argument here for Bitcoin the store of wealth?
It definitely serves a purpose as a store of wealth. We've seen that do very well. It's up 30% this year. It's up 150% over the last 12 months. But people are also using it to transact and send it for one purpose or another to either businesses or to other individuals.
Warren Buffett, very dismissive yesterday. He said shorting suitcases, i.e., you know, people laundering money. Perhaps they're not going to use suitcases anymore. They're going to use things like digital assets, Bitcoin specifically?
So my two things with Warren, first of all, somebody should tell him that Wells Fargo, one of the companies in his portfolio, recently was found guilty of helping the Sinaloa cartel launder a lot of money. So I don't know necessarily.
Fake accounts, I guess, would be the. I don't have necessarily proof on anything else, but obviously things like that with Wells Fargo have been a concern.
And the second thing is I don't really take technology advice from somebody who uses a flip phone or doesn't use email, right? Again, you shouldn't ask me for value investing advice, and so he kind of has his domain, which he's the best in the world at.
What you're saying is Warren Buffett doesn't get it, so stay out of it, basically.
People will listen to his opinion because he's one of the best investors of all time. When it comes to technology, though, I think there's better people to listen to than Warren Buffett.
You're saying he's behind the curve, seriously behind the curve. Talk to me about Sweden, because they've launched a digital coin, or at least they're testing in the testing phases. They are way more advanced, it seems, than even the Chinese, who are clearly pumping a lot of money and investment into this.
So these central bank digital currencies are all coming, and really what I think people need to understand is all of the central bank digital currencies are simply taking the existing monetary policy and changing the technology form factor, right? What Bitcoin does is it actually is a different monetary policy. It's not a fiat inflationary type model, and so ultimately what we're going to have is a competition of currencies, but it's not going to be a competition on technology. It won't be, are they digital, are they not? Everything will be digital. Instead, what we're going to have is a competition of monetary policy. That's, I think, where we believe that the Bitcoin monetary policy is superior to central bank monetary policies, and ultimately Bitcoin will be the winner and will be the next global reserve currency at some point in the future.
We're going to continue this conversation. There's always more to discuss. You're 100,000 call by 2021, and we're going to come back to that energy, the renewables. I'm going to do some digging. Anthony Pompliano there. Thank you so much for joining us.
Thanks for having me
on the show. All right.